You were listening to chartingwealth.com for December the 1st, 2017. And remember what we promised to get out to you this week? It is being delivered in your emails tonight. And that is, of course, to all of our daily market review subscribers. You subscribe for free at chartingwealth.com. We are sending you first Chapter 6, and it's on trend lines. You will love it. Chapter 6 of our book as we write it. You get it. We appreciate your critiques and recommendations. It's coming to all of our subscribers. If you're not a subscriber, you need to be one so you get all this good stuff, because we're going to be releasing very soon our free chart that we have prepared on how to chart Bitcoin and our training. Don't forget, as we announced yesterday, Bitcoin is going to will soon have its own derivative market. There's actually going to be 3 different providers of derivatives in Bitcoin. That is going to help stabilize and back up a whole lot of things and make Bitcoin much, much, much more popular and probably drive the price even higher. But again, I'm not giving investment advice. It's just what I think. Not telling you to go out and buy it. But I'm telling you to learn how to track it. And we will teach you. We're going to re-release that probably next week. So if you're not already signed up for and a member of chartingwealth.com, you need to be. Go to chartingwealth.com, put in your first name, your email address, check for your confirmation email, make sure it didn't go in your spam box, and boom, you are there. Let's jump into the markets. S&P 500 up 0.88% for the day. The Qs, Nasdaq 100 up 0.84%. TLT 20-year bonds down 0.33 and gold down 0.77. Let's jump into the weekly chart on the S&P 500. And I'm telling you, friends, if you would have jumped in when we had that weekly vertical crossover all the way back in September and just ridden it, my friends, just ridden it until and whenever it crosses over going down, it has just been beautiful. Your jumping in point, somewhere around $250 a share up to $262. What's the high? $266. Oh my gosh. Just these weekly vertical crossovers, we tell you, are unbelievable. They are incredible shifts in market sentiment is what they reflect. And they are a way to just, again, practice trade and watch it roll in. It is amazing in your virtual trades. I want you to practice this. The only way you're going to practice it is subscribe, get the daily market worksheet, the weekly market worksheet, and the trade worksheets, and fill them out. So important. Then you'll have a trader's journal, a trader's diary that will really give you everything you need to supercharge your training and to go back and look and learn lessons and keep them. That's what it's all about. So we see the weekly chart bounding up, even the derivative oscillator. So far, 4 days into the 5-day candles bounced up. Big green candle, 2-day and the weekly moving in the same direction. We look at the 2-day chart. Of course, we had that 2-day crossover back on the 2-day candle ending on Wednesday the 29th. And of course, a big day on Thursday as things continued to bound upward. And again, just beautiful as we see the derivative oscillator flip over into the positive and price percent oscillator spike up like a hockey stick. We look at the 4-hour chart. What do we see? Just continues to bound up. Little bit of a pullback on a red candle on the afternoon of Wednesday, the 29th, and then on Thursday up in the morning and the afternoon, touching just a little above the Bollinger Band both times. Remember, Bollinger Bands are volatility bands, and as volatility increases, they get further and further apart. Now, let's go back to the weekly chart, see what we see on the Qs. Well, the Qs is back to a bit of a green weekly candle. Yesterday, it was showing red after it had been green on Monday and Tuesday. Derivative oscillators lost energy. Price percent oscillator still heading down. Candle is about where it was at the end of the prior week. Price movement still above the weekly trend line. What do we see going on the 2-day chart? Well, it has crossed over so far. Again, it's just the first day of the latest 2-day candle, so it's not official yet, but we have 2 red candles so far. It was official that the 2-day candle ending on the Wednesday the 29th is a red spinning top. And so far we've got a red down candle that's been forming crashed through the 2-day trend line still above the weekly, and the derivative oscillators heated up and gone negative and again, just the first day of the 2-day. Remember, a candle's not a candle until its time period's over, and the 2-day candle will not close until Friday. So we'll continue to look and see what we see, what's going on that 4-hour chart. Huge down candles on Wednesday. A little bit of recovery, but even with the recovery, even with the wick on top, not even anywhere near where things started crashing on the afternoon of Wednesday, much less the morning. So again, still downward momentum on the derivative oscillator. Price percent oscillator not going down quite as much, but still headed down. Going to wait and see just what recovers in the Qs when you have that kind of hammer in that whole market. Okay, back to the weekly chart, going to TLT, the 20-year bond. What do we see happening so far in the week? Well, it looked like we were going to have a weekly vertical crossover going up at the beginning of the week. Not now. We warned you. It doesn't always happen, even though at the beginning of the week it looks that way. We have basically a doji at this point. Lots and lots of indecisions, tending down since it is a red rather than a green doji. So we will continue to watch and learn. We see that we've had basically a bounce off unless there is a huge update tomorrow. Don't think we're going to have that weekly vertical crossover on TLT, which means still headed down on the weekly. What's going on the 2-day chart? It's getting closer to a down. Hasn't happened yet. If that does occur, there may be some down trades available. We'll see how this candle finishes up, the 2-day candle on the 20-year bonds finishes up at the end of the week. What's going on the 4-hour chart? Big down morning on Wednesday, a little bit up in the afternoon, and then 2 down candles on Thursday. Bollinger Bands are straightening out as volatility is increasing with downward momentum. So we'll continue to watch and see what we see. Lastly, we go to gold, down 0.77% for the day. If you look at gold going all the way back to about the 27th of October, what's it really done on the weekly chart? Slide sideways. And again, the price percent oscillator heading down, but it doesn't, as we talk about, when price slides sideways, oscillators don't work so well. They need movement to work well. And when you don't have movement, they just get sloppy. And that's what we see. Derivative oscillators losing its downward momentum. So far this week, we have basically a red spinning top, almost a doji. Again, that shows indecision, tending down in the price of gold. Again, like we said, gold down for the day, 0.77%. The first day of the latest 2-day candle, we can see big down candle after a prior doji ending on Wednesday, the 29th. So again, sort of portending where things were going to go, push through the weekly trend line. So it's actually where it should be. And again, 2-day is still up, but that's been pierced. The 2-day trend line has clearly been pierced. So we'll just continue to watch, see if we have a crossover going down. At least we could have both the 2-day and the weekly moving in the same direction. How is our 4-hour chart working for us? Well, so far it's looking better because gold is actually moving price-wise, heading down. Now remember, got a bit of a floor in gold when it gets down to around the 120.50 mark, something like that, 120, 120.50, 121. So continue to keep your eye on gold, see if it does pierce through that or bounce back off. If it starts to bounce off that and the 4-hour chart showing you, then, based upon what it's been doing, bouncing off that 120.50 mark or so, might be something for you to look at in a virtual trade. That's where we are, folks, as we end the week. Hope that you as we end the day, as we approach the end of the week. Hope that you enjoy the chapter 6 that we provided to you on trend lines. Really want you to listen to that. I think you'll get a lot from it. God bless. Take care from the whole team here at Charting Wealth World Headquarters.